Let's go on with story number 4. John Gruss, we're going to go to you with story number 4. This piece coming out of the South Florida Business Journal. I read you the headline for a couple graphs and I want you to comment. Headline: South Florida bank profit margins, loans rise despite higher cost of funding. Here's why. First couple graphs for Mr. Gruss, then I want you to comment. South Florida banks are lending more and seeing an increase in profits as higher rates boost returns on interest-earning assets. The local trend is unique from banks elsewhere in the country that are beginning to feel the squeeze on profits from higher funding costs and slower loan growth. While the median cost of funds for the 20 Miami-Dade County-based banks increased in the last quarter by 0.24 percentage points and 0.17 percentage points for the 30 banks based throughout Broward, Palm Beach, and Martin counties. Loan yields rose by 0.12 percentage points in Miami-Dade and 0.09 percentage points among the Gold Coast banks, which led to a slight increase in the collective net interest margin for both regions, according to Holiday Group's latest Florida Bank Peer Performance Report. Mr. Gruss, you used to write about banking. You have some banking clients or people in the financial services industry with your firm, Gruss Communications. Why don't you sort of help us and help the audience understand what's exactly going on here? And is it all a result of higher interest rates? Therefore, banks are simply making more money, especially for those deposits they have that are paying out any interest rates or low paying CDs?
Yeah, look, part of the problem with these stories is that they're looking at like a backward looking data from quite a while
Yes.
ago, and it really doesn't tell us what's actually happening today. And what's more, these kinds of stories don't really delve into the different kinds of loans that are happening. So we don't know if these are residential loans, car loans. What kind of loans are these? What I'd be really curious about is construction development loans, which are sort of the bread and butter of community banking in Florida. That's really where the rubber meets the road here. And I think if you actually looked at that data, it would show considerable weakness. Uh, the fact of the matter is that community banks are under a whole lot of pressure because they've been paying so little on deposits now. And you can actually go and get a money market fund with 5% or better. Yeah. And so why would you leave it in the bank, which you're paying a fraction? So they're going to have to start paying up. So that's going to really squeeze their profits. And the fact of the matter is too, that the community bank and regional banks, particularly the ones that operate in the Southeast and in Florida, their bread and butter is commercial real estate. That really is where they have an advantage over the big banks, the JP Morgan Chases, the Wells Fargos and Citigroups. It's in the commercial real estate lending to small and medium sized businesses. And we all know what's happening with commercial real estate. It's going through a softening, and I think we're going to have some issues. And I think the regulators are really coming down hard on the smaller banks, the community banks, the regional banks. They're essentially telling them to stop lending on commercial real estate. That slack is actually getting picked up though by private equity and private credit firms that are stepping into that role. But of course, they're charging a lot more for the money. So it's going to be interesting to see. These kinds of backward looking stories that are sort of broad and general and take sort of aggregate data, it's really hard to tell what really is going on. But I really keep an eye on commercial real estate lending, construction development lending. I have a sense, I just haven't seen that many deals in the paper. And for example, in South Florida Business Journal, you could read about a deal every week, a year or two ago. And now those deals are sort of few and far between now. And I don't see a whole lot of regional community banks making big loans on new development construction projects in South Florida. I think everybody's pulled back. There's quite a bit of apartment development. There's concern that there's like some overbuilding in that sector. Of course, the office market is, it's gotten its share of bad PR. Retail is looking a little soft also. So I think you're going to see some pullback by the banks. Yeah.
Interesting, John. Interesting. Before we go on to Mike Seemuth for story number 5, I made a presentation last week to an organization of general contractors, subcontractors, anybody in and around the construction business. And in talking to them, I had an opportunity after my presentation to talk to a banker, a senior vice president, and my question was, are you guys putting money on the street? And his response was, no, we're keeping our powder dry. And what that means is they're basically sitting back, trying to see exactly how to play out. And they want to be able to move when and if things become a little bit clear.